Greetings, my fellow financial ninjas. Today I am going to talk on cryptocurrencies. Now, before we begin our discussion, I would like to tell a story. And this story is about me 20 years ago, in the late 90s, actually. So, more than 20 years ago. Back then, when internet was in its infancy and Amazon sold books, there was no Google. Well, there was Google, but it was pretty much meant for techies. There was just a bunch of forums for finding technical solutions, and it's pretty much limited to that. It was not the full fledged Google that we have today. Having said that, though, the interface for Google that was there in the 90s when I first used Google, it is pretty much the same after 20, 22, 23 years, which is really fascinating. Anywho, so coming back to the original point. What happened was there was a lot of these dot coms that were coming up. Obviously, showed a lot of promise. Internet was new. Amazon was selling tons and tons of books. They had just started selling other items, not yet delved into electronics and clothes and all that stuff. But they kind of with books. I think they started selling CDs and so they kind of jumped onto other things. And there were many other companies that were trying to compete with Amazon, and there was many companies that actually launched. There was from furniture to pets.com to drugstore.com. There was tons of these companies, and none of these companies were actually making profit because most of them decided to follow the Amazon blueprint, which was try to get market share and hold off for a few years before making profits. And that was Jeff Bezos's plan. And as everybody knows, Amazon didn't make a profit for over a decade. But some of these other companies were just kind of burning through their money. Many of them had very successful IPOs. The founding members became wealthy overnight. In fact, I remember in Silicon Valley, they used to sell these custom T-shirts. I became a millionaire on XYZ date, and I had seen those. And I personally knew a couple that had actually made it big with the startup lottery, so to speak. Long story short, there was a lot of these successful Silicon Valley .com startups that had very successful IPOs. The founding members became very wealthy. Uh, there was a lot of euphoria surrounding these newly minted startups, and there was a lot of optimism about how these companies are going to change the future. Now, some of them actually did, but many, I would say majority of them actually ended up going under. At the time, I was in my 20s, right out of the grad school, and I was working for a cool startup. But at the time, I was in the East Coast. It was one of the coolest startups from the East Coast. That company actually exists even till today and is doing very well. But anyway, I used to invest a lot in these dot-com startups, and a lot of these analysts, the financial analysts, used to come on TV and talk about how risky they are and how how these they didn't make any money, so how they were fundamentally flawed and so on and so forth. And when you're young in your 20s, you're a bit more cocky, and you were thinking, hey, these old people don't know anything about how technology works. I mean, the whole internet thing is new. These guys don't know how internet operates, and so I was heavily invested into startups. As soon as the company used to go public, I used to buy the stocks. In fact, I still remember I had invested heavily into Sun Microsystem because they used to provide the infrastructure for these dot-com startups. And back then, there was no concept of these diamond hands, but I kind of tried to do something similar. I purchased the stock, I think, at something like $60. It kept on going down. And I was buying it till it dropped all the way down to $8 because I had a belief in the company. I thought, Sun Microsystems, it was everywhere. It was everywhere. In fact, Sun Microsystems was considered to be way more superior to Microsoft. I mean, everybody knows now how that panned out. Now, the reason for me to bring this story out and is because I see a lot of similarities between what's going on in the crypto markets and what happened back in the late '90s with the whole internet .com boom. It's just like the late '90s. Crypto is a very cool and new technology. Well, it's not that new anymore. I mean, it's been out for a few years now, but it's really gaining public acceptance and recognition in the past maybe 4 3 4 years. And the similarity that I see in this is that there's a lot of enthusiasm on the younger generation that are putting a lot of money into these newly minted coins. And one of the things that I think is that as far as the technology is concerned, the whole blockchain and some of the things that are possible using cryptocurrencies is quite astonishing. And I think it is the future. Eventually, that is the direction that the transactions are going to move. I mean, if you look at the concept of Ethereum and the whole smart contract and the way it is tracked is incredible. So as far as the technology is concerned, yeah, it's going to be it is going to change. I mean, I think it is as big as the internet, um, but there is a similar euphoria that I see that I saw in the '90s. I mean, there were many cool companies. Let me give you an example. There was this company called Cosmo.com. You can look it up. I mean, it was the poster child of the .com. Very successful. I forgot the name of the CEO. Incredibly smart, and the concept was very simple. Delivery, which was food delivery, or you could pretty much order anything, and Cosmo would deliver it to you within. I think they had a limit of 2 or 3 hours in certain markets. And it was a very fascinating concept, and people were amazed. I used it quite a bit. I used to order lunch from them, and it was incredibly cheap and fast. Um, Now the company closed down obviously because it was making heavy losses and everything. But that the concept of was what was established by Cosmo. Now there are many companies which kind of follow the similar model, like DoorDash and many other delivery companies. So my point is that yes, at the time Cosmo was the company. It had a great idea, but it does not mean that it's going to be the winning ticket. And that is my point. So coming back to the similarity between that and some of the ICOs that are on the some of the cryptocurrencies that are on the market, the problem is to recognize which one of these would be the one that would be successful. So just running after the hype and just putting your money into the cryptocurrencies does not make any sense. Right now, Bitcoin is probably the most favored and the default currency. Everybody knows about Bitcoin, and there are things that about Bitcoin that I like. Um, and But we still don't know the use case. It will probably not be used as a currency. It's just too volatile, and there's a lot of other issues with Bitcoin. But as many eminent holders or hodlers of Bitcoin, like Winklevoss brothers and Chamath and all those guys, they are making a case that it's a digital gold, and there's a lot of merit to that. I mean, gold has been around for 5,000 years. It has a value, and as a diversified portfolio, you want some exposure to gold. So, but then gold has its own problems. I mean, there is the actual aspect of having physical gold, which is kind of hard to store. You need to have all sorts of things, and then there are these buying and selling these gold bars are not easy, so one of the things that the crypto provides is a very, very liquid asset that can be bought and sold very fast. And that the whole advantage of that is also its disadvantage because it becomes extremely volatile. So and it's not just the volatility that's the problem, because the cryptocurrencies fundamentally challenge the way governments operate their own currencies. It becomes a threat to them also, which is why we are seeing China go after mining. Initially, they didn't allow the currencies to begin with, the cryptocurrencies to begin with, and now they have stopped the mining. Yeah, and part of the reason why we had the recent drop was, you know, Elon Musk made that tweet, and that caused it. And then on top of that, IRS also said that they would have to track the transactions in crypto. So there was a multitude of reasons why the recent crash happened. And to this, I say that there's no need for panicking. These things have been seen in the crypto in the past. If you look at the history going back all the way to 2013, cryptos had a massive run, went all the way up to 1200 or so, dropped 80% down to 200 something odd dollars. And then the last boom in 2018, when the cryptos went up all the way to $19,000 and then dropped again over 80% to 3,400. So there is a history of cryptocurrencies having more than 80% drops from their highest price. So given that background, I'm actually surprised that people are surprised that this happened. This is something that is to be expected. It is part of the plan, but you can't blame people for panicking, especially if there have been new people, which is what I've seen. Every time this happens, there's a bunch of new people that come in. They buy these crypto assets. They keep going up. They get cocky. They get confident. Start talking about diamond hands, and then start borrowing money, buying cryptocurrencies on margin. And then when there is a drop like this that happened, they panic, and it is very hard not to panic. Actually, Meet Kevin made a video about that today. I'll put a link to the disclosure. He was talking about it, how when you bought the asset at a lower price. So let's say if you had bought crypto at say 3,000, it goes to 60,000, comes back to whatever 30,000. I mean, it's easy for you to talk about diamond hands because you haven't really lost money. You haven't really lost the money for which you put your blood and sweat into it. But if you bought the Bitcoin at $40,000, it went to 60, and now it's down to 30. Then you start getting nervous, and that's where you end up doing stupid things.
So moving forward, what's going to happen? Well, I don't know. Neither does anybody else, because this asset has been one of the most unpredictable ones, and all these YouTubers claiming insight into what's going to happen are just lying. It might go to 100,000, or it might go to 10,000, and the chances of that happening are pretty much the same. So at this point, we don't know what's going to happen. But if you look at the history of cryptos, you can see that usually when a top is reached for that particular cycle, it retraces by about 80%. So if you use that formula, you're probably looking at somewhere around 15,000 for the bottom for the current one. Now, there is one big difference between last time, like in 2017, and this time, is there's a lot of interest from the institutional buyers, big banks and such. So maybe the bottom might be a little bit higher than 15,000. but all indicators are that the eventual bottom for this particular cycle may be somewhere around that region. Now, in terms of your total portfolio, what should be your move? And in my opinion, you should have some exposure to cryptos. If you already don't have it, then I would say wait for another pullback and maybe get your beak wet, so to speak. But as far as the investment is concerned, you should not have more than 1 or 2% of your total portfolio invested into cryptos. As Chamath puts it, it's your schmuck insurance, and just keep it that way, because if you have let's say 10-15,000 and you put all of that in crypto, you're pretty much, there's no guarantee what's going to happen, and taking that kind of a gamble, in my opinion, does not make any sense. So if your total portfolio is 100,000, then put $1,000 into the crypto assets and see where it goes. There is no need to go all out. There is no need to show your diamond hands and whatnot. And I know it's kind of tempting because there's all these news about people making millions of dollars in cryptos. There's this guy, I forgot his name, made some 1.2 million in Dogecoin and such. But remember, all of these people, they invested in these coins at the beginning. And the other factor is also luck. I mean, I know many people that have invested in cryptos and have lost money, which happened in the last cycle when people invested and bought Bitcoin at $18,000-$19,000, and then it dropped all the way to 3,000. It's kind of hard to have those diamond hands. So by all means, you can invest into cryptos, but not have that as major part of your portfolio. And so that is my opinion about cryptos. I hope you like this video. If you do, please give it a thumbs up. Please subscribe to my channel, and I will see you in the next video.